Good evening, everyone. Chantal here. Can everyone see my screen and hear my voice clearly? Thank you. Thank you, everyone. So yesterday, just to summarize, yesterday we have learned about the candlestick pattern. Last 2 days, we have learned about the candlestick patterns, that is bullish reversal candlesticks. So whatever we have learned on bullish reversal, it is just opposite to bearish reversal that we will see later on, because that is not so important on a delivery trading. And we have learned how to trade based on candlesticks. So now, along with candlesticks, we'll be adding 1111 indicators as a supporting indicators. So the primary first point of identification, that is for trading from the bottom of the curve, is candlesticks. And let's see. So now we have learned about candlesticks, how to trade with candlesticks. So now we are going to learn about RSI, Relativity Strength Index. Can't see the screen, Sanjay sir. You have to check your internet, log out, log in. So I think it's pretty clear. So what we are going to learn today is RSI, Relativity Strength Index. Relativity Strength Index. Okay. So now, how to add this indicator on the trading terminal. So it's a blank chart. You can see it's a blank chart. In this, add the indicator. So this place you can add the indicators. Just a minute, there is some bug. So I think upstocks is down. Okay, thank you, Vikram. So let's start. Let's start seeing this from kite. Substocks is down. One day, one terminal is not working. What to do? Okay, RSI, Relativity Strength Index, which is also called as RSI. It's a very important indicator, and the very important thing which we have to note here is the metrics. So first, let's understand what is RSI. Before that, okay, so the metrics are 60 and 40. 60. The metrics are 60 and 40. So upper level it will be red and bottom level it will be green. The top level will be red and bottom level will be green. And okay, let's change in the other way. The color, let's change in the other way. Bottom will be in, okay, bottom will be, okay, that's fine, anything is fine, because we are not going to have anything on this color, just for a color identification. So this is RSI. So now, if you see what all the charts, what all the indicators which is going to come up over this chart is called as overlays, and what all the indicators which is going to come below the chart, we are going to add below the chart, which is called as underlays. Say, like for example, if I add MACD, so this is called as underlay. Again, it will come below the chart, below the candlestick pattern. This segment will be different. This segment will be different. I'll come back again. Okay, next. Say, like for example, if I add moving average, something. So it is called as overlays. That means over the chart, it is laying. It is acting as a layer. Say, like for example, if I add linear regression. So this is okay. Linear regression is an underlay. Okay, we don't use that. Just for an example, I took. Say, like for example, if we take Bollinger Band. Bollinger. So this is called as a overlay. So it's just like forming above the chart, on the chart. So actually we don't have any studies based on this. So let me clear everything. So upstocks gone today, gone for the day. Weekend it might have gone for a Jnana Prasanna. If you are using 5 paisa, you have to contact your broker for a charting platform, whether he is providing any charting platform, or else you have to take a kite or upstocks. That is very, very necessary. Okay, coming back, RSI. Okay, RSI, Relativity Strength Index. So that is the name of the indicator. And the scalings. The scalings is very, very important. Scaling, the overbought levels will be 60 and the oversold levels will be 40. So you should not change the metrics. If you change the metrics, complete study will go wrong. So usually traders will keep 70, 30, 80, 20. So stock Phoenix setup, our metrics is 60 and 40, and whatever color you like, you can keep. So I'll keep green in the above and red in the below. Okay. So just to expand this, let me show you. And one more metrics, just a minute. And RSI period should be 14. And RSI period should be 14. So that is like 14 days chart it will calculate. You should not change this RSI period. That is also very, very important. So let me summarize one more time. In the indicator tab, add indicators. In that, add RSI. The numeric is RSI periods is 14, and overbought level is 60, and oversold level is 40. So that is by default by adding the indicators. So metrics is same for all the time frames, daily time frame, weekly time frame, monthly time frame, intraday time frame. For us, the metrics are same. So there is no different. There is no change will happen. So now, before entering into RSI, why I told about the overlays and underlays, because whatever the indicators, I don't know how others are using. How others are using, I don't know. Okay, I don't know how others, other institute or other traders are using. I don't know. So what we use is, we use this indicator in a completely different way. The RSI metrics are 60 and 40. So that I'll update in the Excel also. Whoever is failed to see this, you can see later. Okay, the indicator name is RSI. It's a very, very important. We can say like this next to candlestick, it's a primary indicator. Next to candlestick, it's a primary indicator. Okay, so candlestick is the first point of identification, and also you can also keep RSI also as a first point of identification. So now let's see the anatomy of the RSI. So the anatomy in the sense, what RSI shows, what is the purpose of RSI, all those things. You can see this is the RSI levels from 100 to 0. It cannot go above 100, it cannot go below 0. So the maximum can be 100. If it is going and hitting 100, it will stand like this. That's all. It will not go above 100 and all. Same like that. If it is going to 0, it will hit in 0. Maximum what we have seen is 15, 20 we have seen, or even 10 we have seen. It has not gone below that. Okay. So the metrics are in between 100 and 0, and you can see here 60 there is a line, 60 there is a line, and 40 there is a line. So 40 being some color of the line and 60 being some color of the line. So now this is the metric level. This is the metric level in the sense, this is the threshold which to act, like green signal, red signal, like that. Now coming back, this line is a RSI line. Whatever the lines you are seeing in the black, that is the RSI line. This color coding is not at all important in the current theory. Color coding is not at all important in the current theory. Just we can understand like the crossovers. I'll explain you whenever it is required. The color coding is not required. Color coding is not required. I'll repeat again. RSI metrics are from 100 to 0. It cannot go below 0 and above 100. And our threshold is 60 and 40. You can see there's a 60 line. You can see there's a 40 line. It's a light color lines. So it is like this. So no other option. And color, this highlighting option is not required. And the line whichever you can see in the middle, this is called as RSI line. This is not RSI, this is not RSI. The line whichever you see, this is a RSI, and it's a very important indicator. So now, how to correlate this RSI movement with market? Market in the sense the chart. How to correlate the RSI movement with the chart? So now, just give me a minute. Okay. So whenever the stock moves, RSI will show an movement. Say like for example, you can see RSI is completely down. Sorry, market is completely down. When the stock starts reversing, RSI also will reverse. So before this kind of movement happens, RSI also parallelly along with the market, along with the stock or Nifty index or stocks or currencies, RSI also, this line also move along with the chart and show an indication. So what is to be seen is today what is the RSI in the sense today RSI is 50.66. So this is the last place which we have to see. Don't see RSI at this place. Don't see RSI at this place. This and all is dead. That is exhausted data. That is over, past. So what we are supposed to see is the RSI, whatever we have to supposed to see is this particular place, the last dot and the metrics over here. Clear? I believe I have explained very clearly. So next, how to use RSI. How to use RSI. So there are two lines. There are two lines. So before how to use RSI in the market, let's understand how RSI will be an impact in stocks. How RSI will be an impact in stocks. So there is a line here. Just to highlight it, I am marking in a dark color RSI 60 and RSI 40. So what we expect is forget about the current market situation. This is completely crashed due to some situation. Okay, it's a crash, it's a disaster. Other than this place, what happens when market trends in a normal phase? Even now RSI works, but in a normal phase, what happens? RSI acts as a support, RSI acts as a resistance. So let me take some stocks chart for a clear understanding. I'll show you one by one. I'll show you one by one. RSI 60 line, RSI 40 line. Okay. So now, what is the theory behind the RSI is? The theory behind the RSI is when the RSI goes like this, and when it is touching the 60 line, we expect to bounce back. That means this line will act as a resistance. Resistance in the sense, if there is some barrier, it's not able to cross this. So that is called as the line of resistance. It will come down. And when it comes down, we expect when it comes near this 40 line, it will again bounce back. I'm repeating again. You can see when the RSI, this black line, when it is going near the 60 line, we expect again a downtrend. And again, when it comes and touch the 40 line, we expect again a reversal. Along with the candlesticks, we will start monitoring these things also. So now, in simple, let me explain you one more time. If this is RSI 40 line, sorry, if this is RSI 60 line, you can ignore this. And if this is RSI 40 line, when the RSI line is moving like this, when it hits the 60 line, we expect this level, the RSI or the market to reverse back. That is coming down. Just give me a moment. Admins, go on mute. Okay, coming back. So we expect to reverse downtrend, and when it comes near the 40 line, we expect again to take a support and go like this. I believe I have explained clearly what is the function of this two lines. Don't worry about RSI is going below this or going below this, above this. Don't forget about everything. When the RSI is traveling between these two lines, when the RSI is traveling between these two lines, that is for 60 and 40, we expect it can also break this level and go. No doubt it will happen. As I told, it will also happen Again, it will not respect the line. It will also happen. So what we expect is, if there is two lines, we expect RSI, when the RSI is traveling, if it is touching this place, it will act as a resistance. As I told you, this RSI 60 will act as a resistance, and when it comes down, this RSI 40 will act as a support. Is that clear? How to use RSI? Nothing I have taught. I have just told the overview of RSI related to market. I have just told the overview of RSI related to market. How to use? Everything is different. It's there in upstocks. Upstocks terminal is not working. It is there in upstocks terminal is not working. Maybe you can try it later. It will be there in all the trading terminals. RSI, without an RSI, there will not be any kind of software. If you see a software and if there is no RSI, that is a junk software. We can simply say like that. Okay. So that's what I told. No, many scientists are there in our group here, in our team. So everyone asks different questions. I'm telling, just learn whatever I am teaching. After that, I'm here to teach you everything, right? I'll take you through all the points. See, there are 50, 60 points, 30 points is there. I'm going to take you through all the points. Don't have any hurry. Okay, have patience. So now, what we have learned, as of now, what we have learned is this RSI will act as a support, RSI will act as a resistance. So now let's understand what is support and resistance. This is ground. So in general, relating to stock market, let's understand what is support and resistance. Assume that this is the ground floor, general floor, the road or the floor, whatever it may be. So we are in the first floor. As I told you yesterday, we are in the first floor, putting a ball. Just we are leaving the ball from our hand. We are not throwing. We are not giving any force. We are just putting a ball in our from our hand. It is slipping from our hand. It will come and touch, and it will reverse. How many times it is bouncing? It will bounce. That's all. Okay. Usually it will bounce like this. So forget about the distance of bouncing. That's all. Forget about everything. This is called a support. That means when you put something on the floor, it will not put a hole on the floor and it will not go down. It will take a support and it will stand there. Say, like, for example, if you drop a 1 rupee coin, if you drop like this, it will bounce little and that's all. There is no other action will be there. Same thing, if you put a ball like this, it will bounce 2-3 times and it will be having a dead momentum. Same like that, you are in your home, you are in your room, you are just entering in the room, you are standing here and you are throwing the ball on the roof where there is a fan. So what will happen? It will hit the roof and it will come down, it will bounce one time and it will have a dead momentum. So this place is called as support, this place is called as resistance. Are we clear? Did we understood? Any doubt? Only in support and resistance. When you fall, someone is seeing you and giving you a support. So don't, without following, someone is protecting. So that is called as support. And when you try to jump, if the roof is very near to you, it will hit on our head. That is called as resistance. Very simple. Support and resistance. Okay. So now let's relate this RSI to stock market. Now what we are going to learn is how to trade only with RSI. We have learned how to trade with candlesticks. Now we will learn how to trade only with RSI. Forget about candlestick patterns at all. Keep it aside. Don't forget, keep it aside. Okay. Keep it aside. There is now no candlestick pattern will come in place. We are going to learn separate indicator and we will club together for better accuracy. Okay, so keep candlestick pattern trading separately. Now we are going to learn how to trade with only RSI. Only RSI. Forget about stop loss, forget about target. Okay, so let's see when to make an exit, when to make an entry, when to make an exit, and when it is not going in our favor. After an entry, if the RSI, if the market is not making a favorable direction for us, where to exit. So forget about stop loss percentage. It is a primary indicator, but only with RSI we will not trade. Okay, but we should know how to use RSI effectively. That is what we are going to learn now. So RSI scaling should be 60 and 40 only. We shall not change this for intraday, positional, BTST, STBT, currency, everything RSI is 60-40 only. So forget about currency, it's out of word. Okay, for equities, RSI should be 60-40 because currency we don't have RSI theory. So don't add this into currency again. So we don't have any RSI theory for currency. So RSI scaling should be 60-40 only. That is oversold limit 60 and overbought limit is 40. Again, this place we will scrap this word. I'm repeating, we will scrap this word overbought and oversold, because even this place we will buy, even this place we will buy, even this place we will sell, even this place we will sell. So overbought, oversold is the unique things which has been used by overall everyone, but we don't consider this. So we require, there are two metrics, 60 and 40, and RSI period is 14 in the sense 14 days daily candle, 14 days daily candle. Okay, so RSI is 14, 60, 40. So that is to be stable. That is the metric, sir. What is your height? When I ask what is your height, you tell no, 5.8, 5.11, 5.12. Like this, RSI should be 60, 40. Okay. So these are the metrics. Like this, for different things, we are going to get a metrics. That metrics to be retained in the same way. Don't do big modification. So we have seen, as again I'm telling the same thing only. These datas are working, this theory is working with already 2000 existing students. Who didn't use, maybe they will be still losers. Who are using effectively, they are printing money, they are making money left and right, no doubt in that. So coming back, so how we are going to use RSI and going to trade. So that is what we are going to learn now. RSI scaling should be 60 and 40. RSI period is 14. Next, no entry in the stock or index if RSI is 40 and 60. In between RSI is 40 and 60, there is no entry. So now again coming back to the square one, we are learning only delivery trading. No intraday, no BT, no intraday comes into picture. No time frame changing comes into picture. It's a daily chart time period. We are putting in RSI and we are learning delivery trading. Okay, so now the second point meaning is no entry in the stock or index if the RSI is between 60 and 40. So in between RSI 60 and 40, it is a no trading zone, identifying the sidewise market. That means this place I will not buy. What is this place exactly? Going back to here, I will not buy, I will not sell. Forget about candlestick pattern. I told you, right? We will not see candlestick, we will not look into candlestick pattern. So same like this place I will not buy, I will not sell. This place I will not buy, I will not sell. Same like this place I will not buy, I will not sell. Same like this place I will not buy, I will not sell. Are we clear? Identifying the sidewise market. If the RSI is in between, in a daily chart, if the RSI is in between 40 and 60, then it is a sidewise market. We will not take any kind of positional calls. So 90% we can avoid trades, because you can see here, mostly it will trade in the middle of the area. So we can avoid just by seeing the chart itself, we can tell it is a no trading zone. More than this, I don't know how to make it big. It's more than 50% of the screen. So more than this, I think you should have a bigger monitor. If someone is feeling that you need a bigger screen, then you should have a bigger monitor. That is the only option. Okay. So now, okay. So no entry in the stock or index if the RSI is in between 40 and 60. Okay. So we will not trade when the RSI is in between 40 and 60. Next, RSI 40 will act as a support, RSI 40 will act as a resistance. So now, just now I missed one point. So now RSI 40, we learned, right? RSI 40 will act as support, RSI 40 also will act as a resistance. So that means, okay, let's see RSI 40. Just give me a moment. We need a downtrend market to explain you. RSI 40 will act as a resistance. Maybe I'll take a bearish stock. Okay, we can take this time. You can see here, market from sideways, market from sideways, market from sideways. It is coming down, coming down. It should take a support at this place. Exactly at this place, it should take a support. The support breached. It started going down. And after that, that is RSI should act as a support. RSI 40 should act as a support, but it didn't happen. It crashed and it started reversing. RSI 40 itself is acting as a resistance. Now, if the market comes down below RSI 40, that is this levels, it will not allow so easily to break RSI 40 up on the upside. So now this RSI 60, it is taking a resistance, 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 resistance. So this is the place it is breaking. So this is the place we enter on a buy call. This is the place we enter on a buy call. When the RSI 40, and the RSI is in between 38 and 41 or 42, we will make a buy call. That is this particular day. This is the day we will buy only based on RSI. Don't ask what is stop loss. Don't make an how to make an exit. What is the target? I'll explain you one by one. Next. Yes Bank is dead stock. Never ever take Yes Bank stock for any kind of technical analysis. That is dead stock, number one. Number two, it is completely operated based on news. So that will not fit into any category of technical analysis. It can be 38 to 42. For buying based on RSI, it can be 38 to 42. See, Ankit, I told you, right? Everyone is big scientist here. I told it is like that. 14 days RSI, that much only I know, sir. I don't know more than that. You sit and do research how RSI 14 days play a role. You can check it. Whatever I know and whatever is working, I am teaching you. Coming back. So RSI, this is the place we will make an entry. So RSI 40 will act as a support. Say like for example, if this is RSI 40 line, let me draw it one more time. If this is RSI 40 line, when the RSI is touching here, it will take a support. When the RSI touching here, it will take a support. When it is touching here, it will take a support. If it is breaking the support, again coming down, it will take a resistance. It will take a resistance. It will not allow the stock or market, that is index, to go up so easily. If it is breaking, this is our entry point. We don't make an entry here. We don't make an entry here. We don't make an entry here. We don't make an entry. Ideally, you can short here. But what is the point of shorting a stock in this level after a big crash in this place? So RSI, the definition is RSI 40 will act as a support, RSI 40 will act as a resistance. Please hold your questions. I'll come back later. Okay, I'll forget something. Say like, as Prabhu told, if you want to lose money, then you divert me. That's very simple, I'll tell you. Maybe if you have any kids, they also will understand, sir. That much I'm explaining you in very much detail. Okay, so coming back, RSI 40 will act as a support, RSI 40 will act as a resistance. Same like that, RSI 60 will act as a support, RSI 60 will act as a resistance. Where? So now, when you see here, you can see from the sideways market, So now I'm going to teach you how to trade based on RSI. Just now I told you how to make an entry based on RSI 40. You can see here, this is the place we can make an entry. This is the place we can make an entry because from downside it is reversing. Just a minute, let me take out the cursor. So this is the place. Okay, this is the place we can make our entry. That is this place. Making an entry based on RSI 40. When you make an entry based on RSI 40, your target will be RSI 60. When you make an entry based on RSI 40, your target will be RSI 60, which is this place. So what you can do is, when you make an entry here at this place, you can trail. When it reaches, you can book your profit here, or else you can still trail your stop loss for higher profits. So ideally, when you make an entry at this particular place, you can exit when the RSI makes a sharp bend. That means this is the place. See this place, like this. It's an uptrend. When it slowly reverses, this is the place you can make your exit, or you can book profit, or without profit, if it is reversing, you can book stop loss. Say, like for example, this is the place it is turned. So I'll show you a place where stop loss hit. This is the place you are making an entry. This is the place you are making an entry. Stock didn't move up. So what you can do is, you can exit when it is crossing this level. You can exit when it is crossing this level. Just a minute. Are we clear? So now let's read the 4-5 points, then we will go for a complete summary. RSI scaling should be 60 and 40. RSI period is 14, and no entry in the stock or index if the RSI is trading in between 60 and 40 levels. It's a sideways market, which is a no trading zone. RSI 40 will act as a support, RSI 40 will act as a resistance. RSI 60 will act as a support, 60 also will act as a resistance. Entry will be done only when the RSI is crossing 60 from the below sideways market, and be on the position until RSI is above 60. Exit the position when the RSI is falling below 60 from the top, so that you can book profit. When the stock is downward, RSI will be the below zone, below 40 zone, and you can make your entry when the RSI is crossing 40 levels. So ideally, these are the places you can make your buy signals. You can see here, it's a buy signal, stop loss hit. It's a buy signal. Again, it's a buy signal, but ideally it's a red candle. Okay, fine. Let's see. It's a buy signal, stop loss hit, buy signal, target done, and you can re-enter here from sideways market when the RSI is breaking 60 levels. It's a fresh buy signal. You can book your profits here. Or next what? See, you can see here RSI is acting as a support on 60 levels. So now this is for a buy signal. Same like that, when the RSI is crossing 60 levels, you can go for a short. From top, when the RSI is going downside, When it crosses 60 levels, you can go for a short selling, but you cannot hold short selling in cash market. If you are going to short, you should hold in future, or else you should go for a intraday only. Okay. So coming back, so this is how the up and down trends, the entry we will be making only based on RSI. So now, since RSI is not a standalone indicator, okay, so RSI is not a standalone indicator in the sense, how to say, only based on RSI we will not buy. We will see other parameters also, and we will see one or two cross checkpoints. So as of now, trading based on RSI, this is the concept. Let me come back again. Let me explain you point by point. So this is well explained. RSI 40 will act as a support, RSI 40 will act as a resistance. You can see here what that means. If there is a line of 60, there is a line of 40. Say like for example, if the RSI is below 40 levels and if it is crossing, here we get an entry for long. Say like for example, it could not able to go up. Again, when it cuts down, stop loss. The same place we can go for a short, but market, that is the stock, will be in the bottom of the curve. Stock ideally will be in the bottom of the curve. Already there will be a big downtrend in the curve, so don't go for a short in the bottom. That is unnecessary risk. I'll tell you, it's a big risk. So avoid going for a short in this place. Again, when it reverses, you can make an entry. Okay, again when it reverses, you can make an entry. And when you make an entry here, your target is 60 levels. When it hits this level, you can book profit. Say like for example, without reversing at this place, if it is going on, you can keep on trailing your stop loss. And when you see a sharp bend, book profit. Clear? So this is trading from RSI 40. Trading from RSI 40. First we entered, it's a stop loss, exit. Don't go for a short at this place because already stock is in bottom. Number one. Next, when you get one more entry, you can make your entry here. When you make your entry here, this is the place for a target. So in case if the RSI is not reversing at this place, trail your profit and exit when you see a sharp bend. So this is what is RSI trading with 40. Clear? So next, RSI trading with 60. 60 and 40. So now when we will make an entry in RSI while trading with 60, in the sense when it is in sideways market, when it breaks this level, we will make an entry. Say like for example, you made an entry, but unfortunately immediately if it is reversing, book and stop loss. And the same place you can go for a short selling. The same place you can go for a short selling. When you go for a short selling, RSI 40 will be your target. Same like that, you can book your target here. If it is not reversing, if it is reversing, you can book your target here. If it is not reversing, you can wait till you see a sharp reversal. Clear? The second criteria, trading in sideways market, and when RSI is cracking this place, you can make a buy signal. You can make a buy signal, and you can hold the positions till RSI makes a sharp bend, or 5%, 20%, 15%, wherever you feel that the target is done, you can make a profit booking. Next, I think RSI is very clear, right? So very simple, trading based on RSI in 60 levels and 40 levels. Siddharth, I told very clearly it is not a standalone indicator. It is not a standalone indicator to just to put a stop loss. It is not a standalone indicator in the sense with this there will be many indicators. So stop loss will be different. Just by seeing RSI, it is very clear. Just by seeing RSI, so RSI will act as a support, RSI will act as a resistance. So now let's see on some chart. Okay. So let's see on some charts. So many members understood. So that's a good sign. So coming back, live market entry. Why do you want at the end of the day? Live market entry. Okay. Trading in 60 line. Let me explain you one more time. See, now in the case if anyone is having any kind of clarification, you have to go back and see the complete video one more time. Okay. Say like for example, 60 line, 40 line. Say like for example, market is in sideways. If it is breaking this level, you can go for a buy and you can hold the positions till the RSI makes a sharp bend. Book profit. This is first case. Whether when you make an entry in a trade, two things only will happen, either profit or loss. So this is for profit. Second, in a sideways market, when you make your entry here, immediately it is reversing. So book your loss here, exit. Next, third scenario, since RSI is above from top, again it will match the top of the curve. When RSI cuts 60 level, this is the place you can go for a short selling. And when you go for a short selling, RSI 40 will be the target. Same like that, when the short selling is not successful, when it again reverses, book your loss here. Clear? So don't have multiple questions. So as of now, this much. Okay. So now let's see an example. You can see here, just a minute, why this line is not going? So now see here, from the sideways market, RSI is crossing 60 levels. That is on this particular day. On the same day you can take position. No need to wait for this candle closure. While trading in RSI, again I'm repeating, RSI is not a standalone indicator to trade separately, but still we will learn how to trade only with RSI. So don't worry about putting stop loss, all those things. We will learn that later. Excuse me. So this is the place you can make your entry. Maybe in the same candle you can put a stop loss. In the previous candle you can put a stop loss, or you can have 2 to 3%, 5% as per your wish. So after making an entry, when the RSI gives a sharp bend, when there is a sharp bend above 60 levels, you can book profit. So which is this place? Your entry happens here, your profit happens here. So how much? Almost like 420 is the entry, 440 is the profit, 20 points profit. So same like that, you can see here RSI is coming down. Don't go for a short in these levels. Avoid trading in short in the sharp bends. You can make a re-entry in this place again. Because entering into sideways market and it is not successful, it is again entering into 60 zones. So you can make your entry again in this particular area. Again, it's a re-entry point. You can book your profit at this particular place. Clear? So this is the place to go for a short. When RSI is crossing 60 levels, so let me delete this. RSI is crossing 60 levels. You can go for a short, but you have to go for a short in a, you can see there is a sharp bend. So this place you can book your profits. Are we clear? So now the key idea is not to make an entry on a RSI above 40, RSI above RSI above 60. It's not a key idea. Now what is the main flavor in this particular theory is entry from RSI above 40 levels, So let's see here. You can see there is a RSI crossing 40 levels. If you might have taken your positions at this particular day, 1101, 1001, it went till 1200. So mainly this will be used for trade from bottom setup. So let's complete the readings one more time. So I think that's it. I have explained how to make an entry and exit with RSI. Let's summarize one more time. So RSI scaling should be 60 and 40. RSI period should be 16. Don't change into 10. Don't change into 20 or 25. It's a daily chart. I'll add one more point. Daily chart only. No entry in stock or index if the RSI is in between 40 and 60. It's a no trading zone, sideways market. RSI 40 will act as a support. RSI 40 will act as a resistance. RSI 60 will act as a support. RSI 60 will act as a resistance. Entry will be done only when the RSI is crossing 60 levels from the below sideways market. Be on the positions after entering in 60 levels. Be on the positions until the RSI is above 60. Exit the position when RSI is falling below 60. So no need to wait till it comes and hits the old price. Say like for example, you are making an entry here. No need to wait till this place. When you see a sharp bend itself, you can book profits. Because when it comes again to 60 levels, say like for example, crossing 60 and again when coming to 60, you bought at 400, again it will be around 410 or 405 while coming back to 60. Instead you book at 430, you book profit. Okay, so that is the ideal thing. So next. So when RSI is on downtrend, RSI will be below. When the stock is on downtrend, RSI will be below 40 zones. When the stock is on downtrend, entry will be RSI crossing the 40 levels. When stock is in downtrend, RSI 40 zone, then RSI. Just a minute, some confusion here. When the stock is in downtrend, RSI crossing 40 zones, then RSI 40 will act as a support. RSI will travel towards 60 level. Same thing which I have explained you. It's typed here. So when RSI is on downtrend, RSI crossing 40 zones, then RSI 40 will be support. I think it's twice. It's return. RSI 60 levels may take resistance, or it can also travel upside. So when it travels after 60 levels, it will become support. RSI 60 will become support. So you can hold the stock for further trailing stop, further profit booking. So that's it in simple. This is the concept. I'll just summarize one more time. With from first, because since it's an important chapter, I'll summarize one more time. There are very simple, sir. Two lines: RSI 40, RSI 60. So from bottom when it is crossing, makes an entry. So target is RSI 60, book profit. Very simple. So again, when it comes down, no entry, no entry, no entry, no entry. Going down, again there's an entry. So if it is not going above, book loss, stop loss hit. Very simple. Next, again reversing, entry, going above, book profit, or if it is further going above, exit when there is a sharp bend. It is trading with RSI 40. RSI 40, trading with RSI 40 only buy signal, no short selling in RSI 40. Clear? Next, RSI, trading with RSI 60. From the sideways market, when RSI 60 it is crossing at this level, you are making an entry, and when it goes, if it is not going as per your expectation, you are booking your loss here. So coming down, the same place you can also go for short selling, but you have to see the trend. You have to see the trend. You can also go for short selling. If you have gone for a short selling, it will come and touch the 40 line. This will be your target. So book profit. Again, when it is breaking, make an entry. When it is going up, and when it makes a sharp bend, book profit. Very simple, that's all. In this you can do long and short. In RSI 60 you can also trade in long, you can also trade in short. So very simple, RSI over. So if you want more clarification on RSI, so almost I have never taken RSI more than 20 minutes in the last 21 batches. Only RSI I have taken almost like 52 minutes. More than this, Prabhu has taken a 2.5 hour session only based on RSI that will be uploaded in the back end. So if you have any doubts, you can also watch it. You can also watch the repeat video of this particular topic. So now RSI is over. We will enter into MACD. How to trade with RSI, how to club everything, how to mix everything and trade, that we will see later. So now MACD, the full form is moving average convergence and divergence. So I'm closing this RSI for a better understanding. And so many members will have many doubts. So you practice. That is what we require. You have to practice this in tomorrow's live market. Take a screen print and post in the group. Let others will validate it. And Upstocks is not working, ma'am. Okay, let's see now. Okay, it's working now. So let's start. So for a better view, I am taking this particular indicator also. So now MACD, moving average, convergence and divergence. Okay, so I don't see relevant images for convergence and divergence. That means the line, the movement of the lines. Okay, let's learn in very simple. And now MACD is not a very important indicator. Very clearly I am telling, MACD is not a very important indicator. It's just a supporting indicator, but it should be there in your stock phoenix setup. It's a supporting indicator. When we don't have green signal from candlestick or RSI, or say like for example, you are seeing a very good stock, but RSI is only 37. At that time, we will see MACD. If RSI is meeting the criteria, candlestick is on properly, it's a reversal pattern, we will go for a trade. We will not see MACD. MACD, okay. Sorry. Click on the indicators, add MACD, moving average convergence and divergence. Don't change any settings. Let it be as it is. Nothing to be changed. Fast MA12, slow MA26, signal period 9. No need to change anything. Just let it be just like that. Add it. So it is a underlay. It is a underlay. Let's study the anatomy or the spare parts of MACD. Screen is not frozen. I think I am moving my mouse. Kavin, you check yourself again. Let's see the parts of no change in Zerodha. Yes, almost like all the trading terminals metrics are same. Okay, all the trading terminals metrics are same. So now coming back, we are having just a minute. Okay. So now let's understand the anatomy of the moving average convergence divergence. Okay. So this is called as a zero line. This is called as zero line which is going. So we don't have anything to do with the zero line. Are we clear? I'm repeating. It is the zero line which is going. We don't have anything to do with the zero line. It is completely not important. Then this is called as MACD histogram, which is in above and below. Again, we don't have anything to do with this. Any doubts? Very simple. There are two. First is zero line. We don't have anything to do with the zero line. Next, there is MACD histogram. So it is by default, it will be coming. We don't have anything to do with MACD histogram. So this is called as MACD line. The black line is called as MACD line, and the red line is called as signal line. So I should be right. So let me check one more time. Let's confirm that. So black line is right. Black line is MACD line, and the red line is the signal line. So out of these indicators in the MACD itself, what we require is these two lines only we require. We require only these two lines and nothing else is required. We will be monitoring only these two lines. We don't want to see anything else in this portion. In this portion, we don't want the zero line. We don't want the MACD histogram. This bars is not at all required. It does not give any significance to our study. We will see only this two lines. Okay. So now with these two lines, we can understand only two things. What we should understand is only two things. One is the buy signal or uptrend. One is sell signal or downtrend. Only the two things we are supposed to understand. Somewhere my screen is frozen. So here, just give me a moment. Some bug is there. Let me switch over to Upstocks. Sorry, Zerodha itself. Okay. So tomorrow I'll be going to office. I'll get my desktop. Initially, it was like mentioned as 7-day lockdown. So we thought of not moving the desktop and all, but now it's like we don't have infinite. We don't have any solution on that. We don't have any conclusion on the closure on the lockdown. So coming back. So we have only two studies on the moving average line. One is buy signal or sell signal. You can see when there is a crossover like this, this is called as a sell signal. When there is a crossover like this is called as a buy signal. So let me draw it one more time. When we see a crossover like this is called as a buy signal. And when we see a crossover like this is called as a sell signal. So how to differentiate? We can easily differentiate what is buy crossover and sell crossover. So that means no big confusion will be there in identifying the up arrow and the down arrow. See, it's very simple, right? To identify the upper arrow, the arrow which is pointing upside and the downside. So ideally there is no, you can see here it is crossing above. If the black line is moving above, then it is a buy signal. If the black line is moving below, it's a sell signal. You can see buy signal, failed sell signal. So this is a kind of stop loss triggered one, buy signal, sell signal. So there are only two lines in very simple, forget about everything after adding MACD indicator. There are only two lines which is running over, and when the black line is having a crossover in above, when the black line is having a crossover in above, this is buy signal, and when the black line is having a crossover from above to below, it is a sell signal. Any doubts? It's in very simple way. So there is no big deal in this particular theory. Only two lines, and if the black line is from below, if it is going above, it is below. It is going above. It is buy signal, and from above it is coming below. It is a sell signal. Okay. So now let's. So two indicators we have covered. We have covered first one. Whatever we have covered is black line is MACD line, red line is signal line. We have covered two indicators. One is RSI, one is MACD. RSI is covered, MACD is covered. Okay. So now we are going to learn about volume underlay. It's a very simple indicator. Whatever we were learning about, right? So now I'll close this MACD also for a better understanding. We are going to learn about volume underlay. So why this volume underlay is very important. Volume underlay, nothing to change anything, red and green, add it, or volume chart. So in Zerodha, this volume underlay is working perfect, but in Upstocks, this volume underlay is not working perfect. There is a bug. It will show in very light colors. So both are same. These both are same, no different. So I'll show in here also. Let me remove the. That's it. Something did happen to this Upstock. So let us close this. Let's not divert with the two trading terminals. Okay. So now coming back, this volume underlay, mostly, listen carefully, mostly if the green candle, it will be a green. If it is a red candle, it will be, sorry, if it is a green candle, the volume also will be in green. Sometimes there will be a change. Mostly it will be same. Sometimes there will be a change. So that is the sometimes only will lead us in a problem. So that is what I am telling. Always we have to see if it is a green, see here. It's a doji. It's a doji, and you can see it's a red candle. It's a red candle. So this sometimes only we should be very careful, or else it is not so mandatory, but still we should be careful in small things. Let's not take any chances. So now, what is the logic behind this volume underlay? What is the logic behind this line? That means, so how this line changes into red and green? What is the logic if the line changes into red and green? If yesterday's close is greater than today's open, then it will be green. Okay, if yesterday's close is greater than today's open, that will be green. If yesterday's open, sorry, if yesterday's close is here, and today's open is, sorry, it's not today's open, today's current market price or the closed price. Okay, let me put it in my Excel itself, the full description. Okay, you can see here, if the current market price is greater than yesterday's closing price, it will be a green volume. If the current market price is less than the yesterday's closing price, it will be a red volume. Very, very simple. That means yesterday's close, and today's current market price is here. So now it will be green. Yesterday's close, today's current market price is below this, then it will be red. Say like for example, yesterday's close and today's current market price is here, then it will be in red. And after that market is crossing in live market, now it will turn into green. Yesterday's close and next day, market opening, if it is like this, like what happened in Nifty today, it will be in green. And market coming down, it will change in red. After that, it went up, it will change in green. Are we clear? Every candle, it is same thing only. Every candle, it is very same thing only. It is for the volume. See, volume color. This is called as volume color. The volume color has been identified by the yesterday's close and the open price. Volume calculation is different. See, what is the confusion? I am telling very, very clearly. Let me explain you one more time. Yesterday's close, today's open, market came down. It will be in green because it is the current market price is completely above the yesterday's close. Again closed here, it will be in completely green. Yesterday's close, today opened, the volume bar will be in green. Came completely down and closed in red below the current market price. It will change into red. That is what I will tell you. Don't buy when the candle is in downtrend. This is volume chart. It is not a volume. We are not discussing about the. We are not, just a minute. We are not discussing about the volume. We are not discussing about the heights of the candle. We are completely not discussing about the heights of the candle. We are just discussing about the volume color. Are we clear? So we are just discussing about the volume color. So volume color has been finalized, or it has been represented by two things: yesterday's close, today's current market price. So now what is the today's current market price? Today current market is closed, but still if we consider what is current market price, it is 1229 only. So if today's current market price is greater than yesterday's close, volume will be in red, and if it is less than yesterday's close, volume will be in green. If you don't understand, go back and see the complete recording one more time. Okay. It matches the same like candlesticks. There will be some exceptions like a doji, like a gap up, gap down scenario. There will be exceptions. So those kind of things we should be very clear. So next. You can see this particular place. Yesterday's close and the current market price or the whole day is completely below the price, but the candle is in green. For example, yesterday's close. Okay, yesterday's close. This place, there is a complete gap down, but it is reversing. It's a full Marabuzu green candle. Still the volume will be in red. The candle is green, but still the volume will be in red. We should not buy. Why? Because we can see there is a instability, there is a unstable, and we can see there is no stable in the market in that particular stock. That is the reason we always tell, don't buy if there is a different colors. So next is What is the time? Okay, we have sufficient time. So now pivot points. Okay, pivot points. The pivot points. Pivot points is a very important indicator. Okay, pivot point is a very important indicator. What is the what else confusions you are having in this volume indicator? It's a very simple thing, yeah. Okay, let me explain you. Yesterday's close, yesterday candle closes here. It's a red candle. Okay, closes here, or let it be even a green candle. Close. Okay, next day it's a complete gap down and opened and closed. Still the volume will be in green, volume will be in red, the candle will be in green. So this kind of controversy will happen. In this case, we should not buy. That is what I am explaining you. Very simple, right? So now pivot points. So pivot is a very important indicator where we cannot avoid pivot point in any kind of charts. We cannot avoid pivot point in any kind of charts. In the sense, pivot point is very important. A chart without a pivot point, it will be very difficult. And let's see. So it's not like a big PPT is not there. We have a small takeaway from the pivot, but we will learn very clearly. A pivot is a technical analysis indicator used to determine the overall trend of the market during different time frames. The pivot point itself is simply an average of the pivot point itself is simply an average of the high, low, and closing price from the previous day trading. Okay. Now, while learning about pivot, two things are there. Okay, two things are there. So data readings. So now we have learned here the pivot point itself is an average of high, low, and close price of the previous day trading. So if you see a daily pivot, say like for example in a daily chart. So let's add a daily chart. Okay. So I'm remove. Okay, let's this volume indicator be there. So we have added the pivot in this particular thing. So this black line alone is called as the pivot point. This black line is called as the pivot point. This black line is called as pivot point. So now pivot will change for a different time frames. For a different time frames, pivot will change. That means when you see a daily pivot, it is the average of last month high, low, and close. For a daily pivot, data reading will be monthly data. And for a monthly pivot, I don't know about other data. Okay, forget about our other thing. Intraday pivot, it's a daily chart. So that means if you change the chart to intraday chart, for example, just for an example, I am showing you a different okay. So a different time frame I am changing. Okay, you can see here when I change 15 minutes, the pivot point is 1169. When I change 1 hour, still the pivot point is 1122. How it is changing? It should be same thing. Okay, sorry, 1 hour. Okay, I made a mistake. 1184. 1169. 1184. Okay, there is some data changes is there. Okay, let's go by this. When we take a daily pivot, so our reading is two things. When we take a daily pivot, the data will be taken on monthly. That means last month high, low, close. Say like for example 900, 920, 900, 800, 850. So add it and by 3. So this is the pivot point. Very simple. So you don't have to again understand, you don't have to calculate this pivot point by yourself, because it is absolutely not required. It is absolutely not required, because when you add a pivot, it will show you the data by default. When you add a pivot, it will show you the data by default. Just we will see the pivot by images and not by readings. We don't have any calculation on data. Okay, we don't have any data calculation on pivot, so it is not required. Just you can add the pivot. Yes, we need a daily chart, right? We are going to analyze only on a daily chart. As of now we are doing a daily chart only. So we will have a daily chart, and this is a monthly pivot. For the pivot, the data has been taken on a monthly basis. So when you take a daily chart for the full month, the line will be like this only. It will not change. If you see, for the last full month, that is calendar month, the pivot will be like this only. It will not change. Okay, so pivot is the calculation of yesterday's high, low, and close. That is point number 1. And so this calculations, maybe I'll give you. You can see that later. Actually, the data calculation is not required. Coming back, so pivot will act as a support, pivot will act as a resistance. Just now I told something will act as a support, something will act as a resistance. So can someone tell what is that? RSI. So same like that, RSI. Thanks for your answers. Same like that, RSI. Pivot also will act as a support, pivot also will act as a resistance. Okay. So pivot also will act as a resistance. So now in the pivot, there are different lines. In the pivot, there are different lines to be understood. This is called as pivot point. That is center of the pivot. It is a very strong support and also a strong indicator. Support 1, support 2, and support 3. If you can able to see, there is a one more line here. This is support 2, support 3, support 2, support 1. Same like this, resistance 1, resistance 2, resistance 3 will be above somewhere. It has hidden. So resistance 2. Okay, so pivot is having the anatomy of the pivot is number 1 pivot point, number 2 is resistance 1, support 1, resistance 2, support 2, resistance 3, and support 3. So this is the anatomy of the pivot point. Pivot is a very strong indicator, as like RSI, as like candlestick. Pivot also is a very strong indicator. That means pivot will not allow the stock to easily fall down and to easily go up. It will not allow the stock to fall down or go up so easily. That means what? Let's see. So we don't use only the pivot points for generating the Nifty levels. We also use different parameters. Pivot point is very normally it is found in all the charts. Pivot point is very normally it is found in all the charts. So now let's see uh, some useful things on pivot points. Something to important things on pivot points, not useful things. You can see here. Stock falling down, it took a support from here, it started moving up, and whenever the stock starts moving up and when it goes near the pivot point, it will have a small resistance. Maybe if the stock is in good trend, it will go up, but if whenever the stock nears any pivot point, there will be a cushion of support and also resistance. You can see here, stock fall, came near pivot, reversed. Same like that, you can see here there was a gap up and managed to be on support of pivot, reversed. Again you can see here, took a resistance, again came down. So always this works. Always this works, and in intraday factors also it works very clearly, but we will be learning that later. You can see here, broken support, broken support. Again you can see here, took support, went up, took support again. You can see here the points, took support, went up, again came down, took support, consolidation phase. So pivot will act as a support and resistance, and also pivot will act as a target. That means, say like for example, if you are making an entry in this place, your next target will be this pivot point. Just that is the reason I told you for Nifty, if Nifty yesterday I told you, right? So Nifty is on a strong pivot. Once if it could manage, if it could able to manage this place, it will start moving upside. However, there are other indicators also will act as important factors. So this pivot will not so easily allow to go upside. Our market is negative 9239. 92. Okay, it's a small 50 points negative. Let's see on Monday morning when we see, we can able to understand. We can understand. So now coming back, the concept is pivot will act as a support, pivot will act as a resistance, and also pivot, a stock on pivot, a stock on pivot. That means when you see a stock taking a support on pivot, say like this place, you can see here, stock taking a support on pivot. This is actually not a tweezer bottom. This is actually not a tweezer bottom, but we can consider one plus point for we can take a deviation and consider this place as a tweezer bottom, since it is taking a support on pivot. So if we make an entry at this place, the first pivot will be first target, second pivot will be second target. So ideally, I have told you very clearly, there is nothing called as first target, second target, but in this place you can able to assume, it's a first target and second target. Trailing stop loss is important. When you trail stop loss, there is no need to think about first target, second target, third target and all. See here, in a volatile market, see, when the market is at this place, do you know it is going to go this till here? Nobody knows. So when you see there is a support on pivot and market is reversing, yes, we can make an entry at this place with the stop loss of the pivot. Not only, it's a additional factor. It's an additional factor. Don't trade only based on pivot. We have many beautiful theories to trade. So the thing is like pivot will act as a support, pivot will act as a resistance. and pivot will act as a target. You can see here one more time, one more thing. Continuous support on pivot, target hit, and after that it was a gap up. Nobody could have expected this. So why pivot have different colors? The colors is to understand. Red is what? When you see a red signal, what you do? On the road, when you see a red signal, what you do? We stop, right? So same like that. When you see a red pivot on the top, so it means that stock is coming down. There will be a resistance. That is what is the learning. That is what is the learning. Just a minute. When you see a red, so it is a resistance. When you see a green, it's a support. So pivot indicator tell us the entry exit. I explained you. Pivot also you can make an entry. All seven lines acts as a support and resistance. Yes. Black line is pivot. How many indicators we use at a time? We will add all the indicators whichever is shown in the stock Phoenix setup, and we will use all the indicators at the same time. We will use, this is like a indicators of a family. Without this, I cannot trade. Without this, I cannot trade. How many indicators? You can count 1, 2, 3, 4, 5, 6, 7, 8 indicators. Without this, I cannot trade. Tweezer bottom should be same, both candle low. Exactly. Yes, right. Every month pivot changes. Yes, pivot will change. Aha. See, very good question. In pivot, there are different types of pivot. We will use only standard pivots. We will use only standard pivots. Many are having different pivots are there. Don't use different pivots. We'll be using only standard pivots. And it's not continuous pivot. We will give only normal pivot. Take out this shading and all. It will be too much colorful. Take out this shading. It will be too much colorful. So every month pivot will change. So when you see some stock, what is stock Phoenix setup? Stock Phoenix setup is, these are the indicators mentions, concludes a stock Phoenix setup. So where all I can add in the upstocks, it is available in the indicator tab. Today upstocks is not working. Maybe tomorrow I'll show you one more time. Will pivot value changes as per time frame? I think no, it should not change. For a daily pivot, for a daily chart, monthly data is being taken, and for intraday, daily data should be taken ideally. But now I could able to see there is some changes happening. I'm not sure why. Let's check it. It's changing. Yes. Pivots are same for all trading terminal. Yes, there is no doubt. Pivots are same for all trading terminal. There is no doubt. It will not change. I think that's sufficient for today, because today we have learned 4 indicators: RSI, MACD, moving average, sorry, RSI, MACD, and volume and pivot. It's sufficient. So balance, we will, RSI is working on Trade Tiger, but it will not be the same. What is wife? I am not sure, sir. I didn't understand. There's no homework. See, what you can do is you can take the screen prints of these indicators which you are identifying, and you can start posting in the groups, and you can start observing that. Others can answer. Pivot, standard, and RSI. So values will be same only. So tell me a trade with all these four. Sir, you identify, sir. Still the trade setup is not completed. Still the trade setup is not completed. So we will have moving average. So once all this rest of the indicators is completed, then we will start uh, aligning the things. See, now what you have to do is analyze the candlestick pattern on daily time frame, trade using candlestick pattern. Don't trade, do mock tradings, do dummy trades, and trade using candlestick patterns and RSI, trade using candlestick pattern, RSI, MACD. So as of now, we can add these things. We are in 4th points. So you can start trading in the sense identifying the stocks till here. So when you see a candlestick pattern, check RSI is supporting, check moving average is supporting. So we have to see all those things. So compiling we will see later. So let's catch up on Monday evening. So happy weekend. So have good practice. So let's catch up on Monday evening. Okay, thank you. Tomorrow and day after tomorrow there is no clarification. Monday we will have a clarification. Thank you.